At first blush, what's your reaction to what we're hearing?
It sounds like the central bank is certainly globally aware, but domestically focused. And this is how Governor Poloz is going to have to proceed. He's going to have to acknowledge that central banks globally are cutting rates, that trade tensions are a massive downside risk. But as you've noted from those headlines, Canada is doing just fine. This is not a central bank that can follow suit without stoking inflationary pressures moving forward. So from my perspective, it looks like this is Governor Poloz telling us we're going to sit on the sidelines. We're staying patient. It's a hold for now.
The idea of the Bank of Canada feeling vindicated in maybe managing through some kind of soft landing, do you think they can have some victory lap today on that?
They certainly should be having a victory lap. This is one of the strongest economies in the second quarter. Some of it a bounce back from a weak Q1. But let's think about the advantageous position that Canada is in this environment. They are importing all of the good stuff in the global economy, that is lower interest rates, which Kawa just pointed out. And they're fairly insulated from a lot of the bad stuff, which is the U.S.-China trade tensions debacle. We've come out the other side of USMCA and NAFTA. Let us not forget that this isn't just Bank of Canada related, and we're also benefiting from the fact that we're not suffering under that business confidence shock to the same degree as the rest of the world at this point.
The other thing that you've talked a lot with us about is the jobs market. And while at the end of last week we saw some softness in the job story, there were still a lot of full-time job creation. And as you had pointed out, more jobs created this year than last year. Now, the Bank of Canada does dig into that when they talk about what are some of the supports for ongoing strength from the Canadian consumer, that the jobs market is pretty healthy. Are there wild cards, though, that they have to watch on that front? Could that storyline change and ultimately impact where they want to go with interest rates?
Absolutely. And this is the big issue when we talk about confidence shocks, particularly in business sectors. And when we see trade tensions start to get escalated, what we're witnessing in the United States is that hiring is pausing. Companies are saying, well, we don't know what the future holds, so we're going to stop hiring. We're going to stop with business investment. The good news in Canada is that even though we had these elevated concerns related to NAFTA, USMCA, related to U.S.-China trade tensions, we have not seen that filter through to the real economy via the hiring segment. That's what's protecting the housing market. That's what's providing stabilization in retail sales. It's absolutely key to Canada maintaining this, what I call pocket of resilience moving forward.
Last time you were here, when we looked at the U.S.-China trade story, you said we're more immune to that than some markets around the world.
Well, here's the challenge, and that is that everything that's going to happen to Canada from this is going to happen indirectly. So if U.S.-China trade wars really begin to weigh on the U.S. economy, that's going to slow U.S. manufacturing, which in turn slows Canadian manufacturing. It's always the second or kind of third multiplier effect that comes through on Canada. That's also why it's really difficult to measure, and we should probably take a lot of these estimates with a grain of salt. We don't actually know what these second and third order implications are going to be. Canada, however, mostly maintains a relationship with the U.S. That's our primary trade relationship, as opposed to, for example, Europe, which is really at the center of the storm, part of global supply chains that are impacted by a wide range of regions. So right now, Canada, I would say, certainly very exposed to what happens to the U.S. next. But for the meantime, in the next quarter to 2 quarters, we remain really focused on a strong domestic consumer, business investment coming back online, and exports that have done reasonably well, particularly in this context.
I'm glad you talked about Canada versus the U.S. because we've been so focused on the Canadian dollar recently. And in reaction to this news this morning, looked like you initially saw a dip in the loonie. But the bigger story has been that the Canadian dollar against the greenback has been strong. We've got a story of a Fed getting ready for rate cuts and a Bank of Canada holding firm. Do you think there was anything in the outlook they provided today that maybe gave loony bulls a pause, especially since we know that the Bank of Canada doesn't, well, they wouldn't outright say it, but I don't think they mind if the loonie is a little bit weaker because it can help the exports.
No, they wouldn't mind. They'd certainly cheer if the Canadian dollar were a little bit weaker, but how do they orchestrate that? They cannot cut rates, at least not right now. The big story, and this is what's been fueling a lot of the Canadian dollar bulls, is that the Federal Reserve has essentially indicated we are going to cut, probably 2 times, if not more, over the next year, whereas the Bank of Canada is saying we don't really have any intention of doing that right now. So if the Bank of Canada cuts, it's likely going to be with a long lag. In our official forecast, we have 2 cuts from the Federal Reserve over the course of 2019, and the Bank of Canada only starting to cut rates in 2020. That's a long lag. It's not unprecedented, but it essentially means that Canadian dollar strength is probably here to stay.
How much runway does the Canadian economy have? Does the Bank of Canada have now that we're talking about the Fed moving towards cutting interest rates?
Well, as I've said Canada is in a pocket of resilience, pocket implying probably 3 to 6 months before we need to get more worried. We do see the U.S. decelerating fairly sharply into 2020. Canada will import that bad news along with it, but we probably have a good 3, 6, maybe even 9 months before we have to start to worry.